Wondering how often you can take dividends from your company? Well, watch on. As a business accountant, my team and I spend all day long helping business owners on their journey. And as you can imagine, one of the key discussions we talk about all the time is this dividend idea. Like, how often can I take them? I've heard from my friend that I can only take them once a year. Once I've spoken to you, Mr. Accountant, what's the deal? Can only take them quarterly. I've heard all these things, and that is what we're going to talk about in this video. So before we get into it, if you like these type of videos, make sure to click the bell and the subscribe button below to get notified whenever we release more videos just like this one. So then, what is the deal? Well, before we talk about that, and I'm going to give you a really short answer and then I'm just going to expand on it, is just a reminder of what dividends are. So dividends, normally in the scenario we're talking about right now, as always on these type of videos, we're talking small business owner, most likely limited company owned by a couple of people who are also working in the business, who quite often happen to be the directors. So it's that kind of scenario. And dividends are a payment of the profits of that company. So, and it's really key to remember, profit. And that profit is after tax, after all other adjustments like depreciation, that kind of stuff. And what's left is sort of this retained profit. And that could be current year profit, could be previous year's profits that you've got, and the accounts show this. What's left there, you've kind of got a pot, and that pot is what you're paying dividends out of. Now, again, it's slightly more technical. There's other things that go in it, but again, to keep it light and top level, that's what you're looking at. So key to remember, after tax for the company, after the company's tax, and then you take this dividend, you might pay some personal tax on it, but at that moment in time, all we're worried about in this video is taking that dividend. What do we need to do, and how often can we do it? So bear that in mind as we go along. Now, the short answer to the question of how often can I take it is, well, you can take it as often as you want in reality. Just depends how much paperwork you want to do and how many notes in your records you want to do, and that's what I'll talk to you about now. Before that though, let's just talk a bit briefly around what you've kind of got to do and what people did do. So in the old days, before cloud technology existed, people would kind of do final dividends. So they might wait, get their accounts from their accountant, or if they're doing it themselves, do it, work out what those dividends needed to be, and then they'd have a little meeting, even if it's a couple of you or just yourself. Oh yeah, I've got some profits here, let's pay a dividend. They do this annual general meeting, this AGM, they write meeting minutes up and they pay this dividend out. And that's, actually big companies these days, big companies still do this kind of thing. However, in the small business world, in reality, what they do now is what is known as interim dividends. And they're paying those out very regularly, very frequently. In fact, you could do it every day if you wanted, every minute if you really want to do all the paperwork. In reality, it doesn't really happen like that. What tends to happen is people will sort of take it out maybe once a month, something like that. And it's quite key to remember, we're talking about dividends here. Some owners will refer to it because it naturally feels like that as their pay, but bearing in mind there's salary and pay, and there's dividends out of your profit. And they're kind of technically two different things, although they might feel like one thing to you quite often. Now, and the reason I say that is that they are taxed differently, and you do have to do different things to get them out. But we're just talking about this dividend, this interim dividend payment that's coming out to you kind of whenever you want. So what have you got to do then to make it legal? Well, again, there's other videos on the channel on this, but quick recap, you really need to make sure that you do like a meeting minutes that just says, even if it's a meeting with yourself, that on that date you declared a dividend. So you'd have that. And then you would also have, generally, you'd do yourself like a little voucher to say that you'd paid it. Vouchers hark back to a day where we used to have a tax credit associated with dividends. That doesn't really exist anymore. But if you've got shares in a lot of big companies, you still tend to get these vouchers and these prints that say that a dividend's been paid. So keeping that also helps your records. And then you need to make an entry in your records. So if you're in the cloud, so you're on a Xero or a QuickBooks, something like that, a free agent, I don't know, whatever you're in, then you'd make an entry into the software. Now that's the majority of the things. The other thing you'd then do is you'd obviously make a payment, or you might not make a payment. You might sit it, and there's probably a subject for another video, but you might put it to what's known as your director's loan account for payment later. You can still do all the stuff, make the dividends, and then take it a bit later on. That's something some people do sometimes for tax efficiency. Again, another video. But in a simple world, you would make the payment. Should do all that, and then the other thing you'd want to retain is proof that the dividend was legal, proof you had these profits payable. And if you've got software, you could bring up reports on the software to do that. If you're listening to all this thinking, I haven't got any proof, I don't know whether it's there or not, then I think the action point from this video is to go away and figure out how you do that, whether you get some software to see it, whether you speak to your accountant about it, whether you reach out to an accountant to talk about that. Like, there's lots of different options, but you kind of got to be really sure that you've got the profits, because the biggest area, and it's probably another few videos I've got planned on this, talking about some of the troubles that people get into, and dividends is a massive one where people get trouble because they don't know if they've got any profits. They just draw the money out of the bank. And if you imagine what you're really doing is you're nicking the company's money. It's the company's money until it's legally yours via this dividend mechanism. But it can't be a dividend if there's no profits. If you haven't taken into account, for example, because you're paying the after-tax figure. If you haven't taken into account the tax bill that's in the future that you've technically the company's earned but doesn't need to pay yet, that's got to all be taken into account. There's probably not enough dividends. This most frequently occurs if you're just draining the bank account, because if you're making a profit and you put money in that bank account, you probably got a tax bill, and if you're not considering that tax bill, you can end up at a problem. And that problem tends to rear its head as what's known as an overdrawn loan account. Just means the money you're taking, as much of it can be dividend as dividend, and the rest of it you actually owe the company back. Again, other videos on this. So that's kind of the long answer, but the short answer to the question is you can pay this as frequently as you've got profits and you want to go and do the paperwork. So there we go, interim dividends is your friend. If you know anybody who needs to know this information, please do share it with them, and I'll see you in the next video.